Hey, welcome back, everybody. This is the Mic Drop Show where we meet every Wednesday morning at 7:30. Glad that you're here today. This is where we talk about real estate, real freedom, and real results. And I'm your host, Mike Morawski, 30-year real estate veteran, bounce back coach, property manager, author, speaker, and educator. Love to just bring you great content and great information. Listen, I've owned and operated thousands of apartments across multiple markets in the US. I've seen wins and I've seen losses. I've learned lessons that have shaped how I build businesses today. Welcome back to the Mic Drop Show. Listen, this is a huge week, or today is a huge day for us. So we not only have the live Mic Drop Show that's happening, but also later this morning, we're doing a webinar that's going to talk about why the stock market is not the place to be today and why multifamily is the place to be. If that's an event that you think you want to listen to, it's later this morning. Drop me a DM. We'll get you a link sent out on that. And tonight at 5 o'clock, I'm going live on Instagram, 5 o'clock Pacific time. I'm going live on Instagram with Daniel Barrero from New York. And if you don't know who he is someone you're going to want to tap into. He is a real landlord. There's no doubt about that. This morning, solo myself this morning. But here's what's interesting is I have a bunch of questions that people have asked across the board, and I'm going to bring you a lot of those answers or my perspective on those answers here this morning. So as we're going through this morning, if you have any questions, if you want to know something, drop it in the DM, shoot me a quick text. We'll get those answered for you either on this show or the next show. Remember, our sponsor for this event is Sync VA. If you are a real estate agent, an investor, a business owner trying to scale your business, looking for help that will be an executive assistant, a closing coordinator, a appointment setter, a deal finder, Sync VA is your one-stop shop to find that virtual assistant to help you in your business on a day-to-day basis, as well as short-term or long-term. So reach out to Sync VA at syncva.com and get connected with them. See how they can help you with your next virtual assistant hire to scale your business. All right, we're going to dive in here a little bit this morning. Somebody asked an interesting question throughout the week here, but they said, where are U.S. multifamily cap rates in 2025 and 2026 headed for Class C value add? And how should we look at factoring those in our acquisitions, right? So cap rates in, cap rates out are something that we really have to look at when we're buying a property. And it's really hard to blanket the U.S. as one. Real estate is such a local business. It's a localized asset. And it's not only localized to the market or to the U.S., but to the submarket. And I really want you to focus in on this for a minute. If you look at a market like Tampa, we own some assets in Tampa, Florida, and Tampa is a market on its own, but it has 15 submarkets within it. Look at Chicago. Chicago is a market on its own, but it has 78 submarkets in Chicago, not including the collar counties around there. So every market has multiple submarkets. So what your job as a acquisition person, as the underwriter, as a owner operator is to dig in and to look at the market as a whole, look at the submarket as a whole. And that is done by taking the last several transactions that have occurred in that market, seeing what those cap rates are, and getting the average. If I'm dropping into a market today, let's say that I want to buy a property in Knoxville, Tennessee, and it's a C-class deal. I just kind of, have a feel for what that market is and where those cap rates are. But if I'm looking at a C-class deal today, I probably want to buy something at a 7 cap. Tulsa, Oklahoma, probably the same thing. I want to be in that market around a 7 cap. Now that could fluctuate based on the submarket, based on the asset class, but I'm talking specifically this morning on C class assets that are value add. So if you're going in that market and you get an offering memorandum from a broker and there's no price on that offering memorandum, in order for you to really dig in and take a look at what that market has to offer, what you should be doing is taking that 7 cap and taking that against your NOI to come up with a price, a per unit price, a purchase price on that property. And that's going to really help you determine whether or not that's an asset to even go after at this point. So, there's always that short evaluation before you go to the underwriting, before you go to the next step of the bigger underwriting, right? You want to spend limited amount of time looking at those assets. But, in short, the answer to that question is it's all based on the market. It's all based on the submarket. You've got to look at the submarket. If you're looking at deals in a specific market, you're unsure of what the submarket has to offer. You're unsure of what that property has to offer. Ask the broker to give you a CoStar report. Have them pull you a CoStar report and read through that. That'll give you an indication of the recent sales, of what is being rented, what recent rental rates are, where the market is headed, what the absorption rate is, all the different things that you need to be looking at within that. If some of this seems a little abstract for you or outside of your realm of knowledge, give me a call. We can talk about that and see how we can help you maybe get a little bit educated. Another question that I got this week was multifamily investors in the U.S. How have insurance costs changed the deals? How have insurance costs changed the structure of deals? One of the things that we're battling with as multifamily owner operators or just across the CRE industry is rising insurance costs. Even inland, away from coastal lines, we still are dealing with insurance because of fires and hurricanes, or tornadoes and hail and heavy storms that have impacted the insurance industry. I think it's just one of those things in the world today that we have to deal with. But you have to watch your insurance costs. You have to be looking at those premiums on an annual basis, having your deals requoted, especially if you already own deals. Don't just assume, but get on the phone, talk to an insurance broker that you have a relationship with and ask him for that particular asset you're underwriting or you're looking to purchase, what they think the insurance cost is going to be. Let me give you an example around this. We bought a deal back in 2021 and we were paying $950 a unit for that property for insurance. We're about 5 miles off the coast in Florida. And, we at the time, we thought it was a little high, but relative to what happened, it wasn't high. And the deal based at $950 a door underwrote really well. Well, what happened over the next 18 months is we went from $950 a door to $2,200 a door. And, when you get rising insurance costs so dramatically like that, and you haven't had the time to catch the rents up to those premiums, what happens is you start to bleed cash and you don't have that cash flow coming in. That's one of the biggest challenges I think that operators are seeing today across the board. Now, that insurance cost that was at $2,200 a door has come back down now. We've been able to mitigate some of that to $1,300 a door, but it's still quite a bit higher than what we originally had that deal underwritten at. And it has really affected the cash flow on that particular property. So you've got to continue to watch out for that. A lot of times to offset that, you're going to get higher deductibles. Maybe you have a higher deductible with a higher wind and hail damage rider on there in order to protect that property. But they're insurance things that lenders are requiring that you have on those properties in order to get mortgages today. And they're causing those insurance rates to go up. So it's a constant battle that we're always fighting. So, a lot of times, and I always have to laugh because people complain that the rent goes up, but the rent goes up because our expenses go up as an operator. And, a lot of times that tenant or the city or the tax assessor thinks that the owner operator is rich, and you're really not. You own the real estate, you're operating it, but you're also battling the expenses. So you have to look at where else you can cut expenses and increase income in order to fight that battle of rising insurance costs. I think it was one of the large, I think it was State Farm who just came out and they said across the board, they are raising their insurance rates, their premiums by 8% a year across the board. Residential, commercial, auto, all the asset classes are going to be impacted by this raise in insurance rates. Now, are they the first? Are they setting a trend now? Are we going to see insurance go up with all carriers? I don't know, but you have to continually watch that and battle it. The other thing that's interesting, and I wanted to make a comment on this, over the last couple of years, we've battled 3 hurricanes in Florida. Our property has not had any damage. We've not had any flooding. We've not had any problems as a result of those storms. And the insurance rate continues to go up. So, as I said, it's something you have to look for. When you're underwriting, overestimate what you think your insurance is going to be. Make sure that you're not caught off guard. I'm always talking about being conservative in those underwriting measures. Make sure that you're looking deep into those numbers and have a good relationship with a broker that'll give you some good ideas. So another question that we got this week from another listener, she was asking, where would you invest in a multifamily rental right now and why? That's a great question. I think there's a lot of markets around the U.S. One of my good friends, their company monitors 1,100 submarkets around the U.S. 1,100. Can you imagine the staff and the people that are looking and watching those markets to see what's happening? We monitor about 40. So between myself and my coaching clients, we're all looking at different markets. We're watching different assets that come on the market. We're underwriting different assets, but we're monitoring about 40 submarkets around the U.S. And, I think my biggest biggest markets that I really would like to invest in the coming year are going to be markets like Atlanta, in the Atlanta area, Huntsville, Alabama, Northern Alabama, a couple of Tennessee markets, and Dallas, Texas. Always been very strong markets in the Southeast, markets that I really like. Now, every operator is different. I know some operators that are just knocking it out of the park in the Northeast, up in the Pennsylvania market. So where do you live? Do you want to be invested in your market? I've always built my portfolio from the coach seat of an airplane. I've owned and operated over 8,000 units, and we built that from a coach seat of an airplane and traveled around the country, been in different markets, because we look for those assets that are lower priced, that we can get higher rents, that will offset those cap rates as we look through those. So, think about where you want to be. Think about what you want to do and what market you like. I've always invested in the Southeast because I don't like snow. And, I lived in Chicago forever, and I didn't like investing there because dealing with the snow. I'd rather deal with sunshine and, heavy rain, and even hurricanes from time to time. But, so you have to pick what you want and what you like. How do you even pick an asset, right? Is it, and a lot of times I'll look at an asset that we get in an offering memorandum and ask myself, is this a place that I'd like to pull into as a tenant? Is this a place that I'd like to live? Or can I turn this around to be that place? So, questions that you have to ask yourself. I'm the what if guy, right? I ask a lot of what if questions. What if this happens? What if this doesn't happen? And how do we mitigate, or how do we plan for that along the way? Here's the last question this morning, but would you buy a small multifamily now or wait for lower rates? I'd buy now. Listen, it does not matter what interest rates are at. If you can find a great price on a good opportunity, buy it now. I've been in this business for over 30 years. I bought when rates are high. I actually got in the real estate business when we were at double-digit interest rates. Okay. And there was a time in history when interest rates were 17 to 21%. Now, when people say today that interest rates are high because they're 6.5 or 7%, it doesn't matter, right? I would still buy today, because here's what's going to happen. Interest rates will come down, and they'll come down enough that justifies you going in and refinancing that property, doing a cash out refinance, returning capital to investors, or putting money back in your pocket. However you're going to structure your deals, whether you're buying it on your own, a joint venture, a syndication, there's different models, different strategies, different ways of doing that. So think about that, because I always say, I made money when interest rates are high. I've made money when interest rates are low. I've made money when there's Republicans in office, and I've made money when Democrats are in office. So what does it matter? If you're an investor, you're an investor. I've seen so many people come in this business over the last few years, really thought because the wind was at their back and the market was growing and they were doing well, did well. Then as soon as the tide shifted, and as soon as the tide went out and those interest rates went up and it got harder to operate properties and deals weren't penciling, they left. They left the space and they went to do RV parks, mobile home parks. You know what? And none of those asset classes are bad. But pick an asset class, stay focused on that asset class, and move forward. And continue to do the same thing over and over. We have to do this thing. We have to master the mundane boredom of the daily tasks that build your business. Underwriting, raising capital, talking to investors, building relationships, how are you doing that? What are the things that you're best at and doing every day? So it doesn't matter right now or tomorrow. I love this old saying. There's 2 times in life you can plant a tree, 20 years ago or today. Either one, the tree's going to keep growing. It's the same thing with real estate. You have an opportunity. You could buy that real estate today, or you can wait till interest rates come down, till the tide goes back out. Here's the thing I've been saying lately, and I'm going to land this plane on this, that by the time the news catches up and say the market is shifted, it's going to be too late. So don't wait for the news to start saying that things have changed. Look at the statistics that are happening around you now. Look at the investor sentiment that's happening now, and make a decision to get in or get out, and to stay focused on what you're doing, because this is a business that you're going to be able to make millions of dollars in over the next few years. And are you going to be one of those people that are going to take advantage of it or not? Hey, thanks for being here this morning, but that's a wrap for today. I appreciate you showing up every week, and tell somebody about this show. Remember, multifamily rewards systems, people, and principles. Not shiny objects, not shiny deals. Follow us, subscribe to this show, subscribe to our content. We're always bringing you out great information. I want to remind you, coming up in October, and mark your calendars for this, October 16th and 17th is my 6th annual virtual multifamily summit. So look, if you're somebody who's new coming into the multifamily business, if you're somebody who is a current operator trying to figure out what's going on and how to go to the next step, this is an event you're going to want to be at. 2 days, 20 speakers and panelists, nationally known. We're going to have Hunter Thompson on this year. We're going to have Bronson Hill on this year. We're going to have Brad Sumrock on this year, and a host of others that are going to pour into you for 2 days. Listen, if you don't make anything else, make the first part of the event. My guest, Jay LaGuardia, is going to be talking about mindset. And he is one of the sharpest guys talking about mindset that I've talked to in years. And he is going to teach you some skills and some strategies that are going to keep you engaged in the game. So get your tickets today. Go to multifamily25.com, multifamily25.com, and register for the event. Seats have been filling up fast for this virtual event, but it's going to be 2 days. And you have the option that if you're not going to be there, you'll be able to get the recording for the entire event that you can listen to later or over and over again. And you know how I feel about repetition builds reinforcement. So, hey, thanks for being here this morning. I appreciate you. I hope you're having a great week. If I can do anything for you, send me a message, ask me a question. It'll get featured on one of the upcoming shows, and I'll look forward to seeing